So for 20 years, actually more than 20 years, Vanguard had this fund structure that essentially combines the mutual fund and an ETF together. So we know ETFs have been growing, mutual funds have been around since, everyone's parents were investing, and ETFs are more tax efficient because of the way that they trade. They trade intraday, mutual funds do not. Vanguard figured out a way to essentially add an ETF share class onto a mutual fund. So if you're in a mutual fund, sometimes you're in the A class, the B, they also have an ETF class. By nature of doing that, it essentially took all the tax advantages of the ETF and put it onto the mutual fund. So Vanguard saw this idea. They were like, this is a really good idea. Yeah. And they patented it. The patent expired in 2023. But all the while, they were able to save their clients billions on taxes because a lot of the mutual fund holders never saw capital gains distribution.
So the assumption is that they were able to attract investor money because of that advantage, correct?
Yeah, I mean, there's definitely other reasons why they were able to attract people. I was talking to an ex-Vanguard employee who said, this was something that we patented and protected, but there's other reasons why Vanguard became so humongous, clearly. But 80 other asset managers have now asked the SEC for permission to recreate this structure since the patent has expired. So clearly other people want in on this.
But it's only something for mutual funds, right?
So technically, no.
Okay.
The SEC has first signed off. It's indicated that it's going to approve the first iteration of this, where, yes, you add a mutual fund share class onto an ETF. Some asset managers are actually trying to do the reverse, where you add an ETF or you add a mutual fund share class onto an ETF. It's a little wonky.
Why would anyone want that?
They want to do that so that they can put ETFs into retirement plans, because right now only mutual funds exist in a retirement plan. If you have an ETF, you put a mutual fund onto it, you can kind of backdoor your way into retirement plans. So this development that we saw from the SEC this week, that they signaled that they're going to approve it, it's good for the mutual fund, but it's also potentially good for people who have ETFs and want to get into 401ks.
I was going to say the ETF industry, right? Who are saying, okay, I want to tap into that money. I'm just thinking for the investing audience, right? What's the difference for them? Is it just they now maybe will get a tax advantage?
Yeah, if you're sitting in a mutual fund and now the mutual fund company that you invest with gets the approval from the SEC to do that, you could potentially be paying less taxes in the future if they choose to use this design where, again, you essentially tack on an ETF to an existing mutual fund. You use the ETF to wash out the taxes.
How big of a threat is this to Vanguard's model?
I don't think this is as much of a threat to Vanguard. I don't think Vanguard will feel I don't think they'll see outflows because they have such a strong investing community. But I think this could help the T. Rowe Prices of the world. These companies that have mutual funds, they're seeing outflows. They need a lifeline.
We've talked about how many ETFs are out there. Just quickly, in the story, it says, meantime, issuers launching an ETF for the first time will need to liaise with market makers, which play a key role in keeping fund shares trading throughout the day, something not needed by mutual funds. So that's important.
Yeah, there's going to be some technical hurdles in terms of actually getting this on the ground. So again, there's 80 asset managers. Everyone's lining up to do this. Is there enough tech? Are there enough, resources to actually support this structure?
Right.
That remains to be seen. But right now, definitely a regulatory win for the asset management industry.